This is Cece. Welcome to the Orbit. It is Monday, May 13th. We've got futures higher this morning. We're looking at the SPY pre-market up about 0.2%. That is inside the expected move of about 0.4% coming into the day. This is Income from Options Weekly, where we look at the setup for those that sell short duration credit spreads, iron condors, credit call spreads, credit put spreads. We're looking at SPX for the week. We've got about a 1.2% expected move for the week. Now, what's interesting is we have extremely low volatility that we've been talking about on the Orbit incessantly over the last week and a half. So we have, 15 IV today, 13 IV. This is extremely low, short duration, 0 DTE and 1 DTE vol. It pops a little bit on Wednesday, and that is the CPI number. And that we're looking at about 17 IV there. So a bit of a pop, 4 points from today, let's say, 4 points. And that is the CPI. And if you look, the expected move for Wednesday is 1%. The expected move for the entire week is 1.2%. So you can see most of this week is centered around Wednesday. We do have Chair Powell speaking on Tuesday. There is some other economic data to look out for, but Wednesday is the big day for market movement, or at least the way options are pricing. So that means for a day like today that is not expecting fireworks and where we've already seen a 0.2% move, we can go in and we can kind of look at the distance that these short strikes and what kind of risk reward do we be getting. Let's do an iron condor, and this is based upon Friday's close, and SPX is pre-market right now. If we go in and we look at the distance, it closed 52.16, and we've got a short call of 52.40, so we're talking 25 points in either direction. If you went a little wider, and now we're looking at about 35 points in either direction, you get that 400 to 100 risk reward. Now going back, and that's a 0 DTE trade, and of course it looks like as of now that stocks are going to open up a little bit higher this morning. But as we discussed last week on the Orbit, the timing of multi-day trades. So we're looking at right now, if we looked at the iron condor for the week, let's go out and let's select the 17th. If we're looking at those strikes right now, we're looking at about 52.80 to the upside, 51.55 to the downside. Again, this is based upon Friday's close. That is 14 vol. Going into Wednesday, we are likely to see, into Wednesday morning, we're likely to see vol continue to tick higher. And what that will do is that will affect Wednesday, Thursday, and Friday's expiries and vols. So right now we are at about a 1.2% expected move. About 1% of that is priced in between now and Wednesday. Into Wednesday, this 17 IV is likely to be, in the 20s, might even be like up closer to 30 as we enter the CPI morning, so at Tuesday's close. So what that means is selling premium out here for Wednesday, Thursday, Friday. There's probably no rush. Some traders could wait till the last minute if they want to sell the CPI. If volatility gets really high going into the CPI, or at least higher than it is now, you could wait till the last minute. Similar to an earnings, you would have a very good sense of your strikes. For Monday and Tuesday prior to that, for 0 DTE and short duration traders, this is again the conditions of last week, where it could be an ideal situation from a realized vol standpoint, in that right now options are not pricing much of a market movement, heavy gamma in the market. And as we said, we are only up about 0.2% pre-market, so you're not seeing these big gaps higher and lower overnight like we did a week and a half ago. So from a selling overnight or selling intraday, and from a realized vol standpoint, it is really nice. From a implied vol standpoint, vol is really low, meaning options premium is very low because the market's not moving much and options aren't pricing for much movement. So timing is crucial. It doesn't take much for the SPX to move within that expected move or from one end of that expected move to the other. So options are pricing not a lot of movement. What that means is a very small chance of a big market move, like a 1% market move. However, a 0.4%, a 0.3% market move is the expected move, and it's quite likely that that can happen. So you have to be aware of that as a premium seller.